Crony capitalism could be choking credit to MSMEs. Gopalan Ramachandran, June 22, 2016. My email is indiagrow@gmail.com. Thank you for your time. Micro, small, and medium enterprises are vital to India's bubbling but often hobbled enterprise economy. Dr. Subramanian Swamy, Member of Parliament, has drawn our attention to the poor flow of credit to the MSMEs. Dr. Swamy has asserted that credit to the MSMEs is both inadequate and expensive. Inadequate and expensive. India's Minister for MSMEs, Mr. Kalraj Mishra, had drawn attention to these in November 2014. Mr. S.S. Mundra, Deputy Governor of the Reserve Bank of India, had stated in April 2016 that the RBI was taking several steps to improve the flows of credit to the MSMEs. So, MSMEs face a problem. This acknowledgement is necessary before we can examine its extent and depth. MSMEs face many risks. They face big risks while conducting their relatively small businesses. The large corporate organizations face fewer and smaller risks. Moreover, they have cohesive associations. The ASSOCHAM, FICCI, and the Confederation of Indian Industry come to mind. Their voices are heard. By contrast, MSMEs are usually very silent. Cronyism could be the most important cause for the lean and poor flows of credit to MSMEs. The time has come to address this particular issue. Dr. Raghuram Rajan, the Governor of the Reserve Bank of India, had commented on crony capitalism in August 2014. I had made a video soon thereafter. Dr. Swamy has now commented on bank credit to MSMEs. Therefore, a viable and durable solution has now become both necessary and possible. Consider crony firms. They face thin competition, they have big, steady, and low-risk revenues, they have assured access to inputs, they are the favorites among employees, they also have unhindered access to markets. As a consequence, their business risks and financial risks are overlooked or they are underestimated. Therefore, low credit spreads emerge. These very small credit spreads do not reflect the real business and financial risk. If a firm is very risky, its credit risk should reflect it. It should be large. But in the context of crony firms, they actually are steeped in considerable risk, but the perceived risk is very small. Therefore, the credit spread is very small. Therefore, they get to borrow at very low interest rates. These low credit spreads do not reflect the high likelihood of default and the very big monetary loss that could happen when a default occurs. Let's move on to equity and total capital of crony firms. While they enjoy tremendous advantage in the context of flows of credit from the banking system, they also have extraordinarily nice access to institutional equity. Because of the thin competition and the big, steady, and low-risk revenues and projected profits, institutional investors, including mutual funds and insurance companies, buy into the equity of crony firms. They have low cost of equity, and finally, a very favorable low weighted average cost of capital, or WACC. The weighted average cost of capital, WACC, to crony firms is very low. It's artificially low. And what about the impact on the net present value? In capital budgeting, we include all the inflows of cash and discount them and then aggregate them period after period and then subtract out the investment. Crony firms have three advantages. First, they have assured numerators, the cash inflows to the firm, because they face very thin competition. The second part is the underestimated discount rate. The numerator is big and then the denominator is made to look small because of an advantageous cost of capital. Finally, crony firms also get to buy land, assets at very low prices, lower than market. Therefore, the net present value of projects sponsored and promoted by crony firms will usually look very extraordinary. Even ordinary projects will look extraordinary. Projects that are most likely to make losses will now look very profitable. Therefore, the nation swings all its savings and investments towards crony firms. The banking system now has to earn a positive net interest income from its loans to cronies and, of course, the non-cronies. For a given cost of deposits, now what you need to consider is how much of the loans to cronies will perform. And given that they've been given at very low interest rates, with a very high likelihood of default, the banking system will have to depend on the non-cronies. Consider now the plight of the other borrowers, the non-cronies. The non-cronies will have to pay for the low cost of credit to cronies. This leads to expensive credit to non-cronies, and therefore the wise non-cronies may also stay away from borrowing. As a consequence, this will lead to inadequate flow of credit or inadequate offtake of credit by the non-crony firms. And what about the advantage and the disadvantage in the context of net present value? The denominator, the discount rate that's there in the net present value model, the R, is a huge disadvantage because crony firms will pay the lower interest rates, but non-crony firms will pay higher interest rates, and therefore the R is big. And as a consequence, ordinary projects of non-cronies will now look dull and risky, and projects that are most likely to make profits will now look like very unprofitable projects. Therefore, India's non-crony firms have stopped making those big investments in the economy. Crony firms aren't making any more investments because credit flows to them have stopped, but all those investments are lying unused. And the non-crony firms, in their wisdom and in their fear, have stopped taking advantage of a very good economic environment. India needs to address this issue. The banking system has to move towards pricing credit after determining the true cost of credit to both crony firms and non-crony firms. But the potential for self-collection seems to be very low because the administrative and monitoring cost per rupee of loan to a very large number of small firms is very high, but you give these same loans to a small number of big firms, it will be very small. Therefore, India's MSMEs will continue to be hobbled and impaired. Thank you for your time. Thank you for watching this video.